Alrighty, folks. Welcome to Trading Made Simple. My name is Mike Conlon. I work for an outfit called FXEDU. We do forex trading education, and what we're going to look at today is just some basic price action trading. What we're going to be looking at is a chart here of Euro USD on the 5-minute. Although we've got somebody who wants to see pound dollar, so we can take a quick peek at that. We're going to be back and forth. We'll look at pound dollar, we're going to look at euro dollar, we'll look at Aussie dollar, we'll look at some yen crosses. So there's going to be a bunch of different things we can look at. We've also had some folks here want to take a look at a scalping method that I previewed last time. By the way, this is my second webinar here at FX Street, so I thank you all for having me and for attending. The scalping thing that we're going to take a look at, it's a triple Bollinger Band setup using Heikin-Ashi charts, and I'll go over that in a little bit. But I just want to talk a little bit about what's happening in the market so far this morning. All right, we had a little bit of a sell-off here. You can see in euro overnight there was a little bit of a flight to safety trade going on. We've got stocks in the U.S. are lower this morning. President Obama came out yesterday and he had a speech about budget deficit. What's going on here in the U.S. And, he didn't really say much as far as what his plans are. He just sort of poked hole in the other guy's plans, which, that always makes the market nervous, especially when you hear things like, raise taxes or we're not going to cut spending here, here, or here. So I think we had a little bit of a flight to safety going on earlier this morning. We've still got issues in Japan with the nuclear crisis. And then just this morning at about 8:30, the U.S. Came out with the initial jobless claims number, which are trading back to a 4 handle. I think it was 412,000 new people unemployed. And we also had producer prices moving up a little bit higher, 0.7%. So, the Fed's starting to get a little bit nervous here, and they're hoping that this is going to be just maybe a one-time print, and that this isn't the start of a new trend, or I shouldn't say a new trend, but of a continued move lower. So, things don't look so rosy here in the U.S., but hey, if you're a Fed watcher, this could be good things for you because maybe that puts the idea of QE3 back on the table. So, I don't think anybody's really hoping for that, but you never know. If politicians in Washington can't get their act together, then, the Fed may have to come out with just accommodative monetary policy to counteract the effects of not doing anything with fiscal policy. So that's sort of what the themes have been this morning. And you can see here earlier, okay, we had the euro trade down, and just a little quick bounce here right ahead of 1360 area. A little bit of a hammer candle there, a little doji, and then we moved higher. I just want to show you, I'm going to run a quick Fibonacci retracement here just to show you some quick levels. Where is my Fibo? Oh, chart elements. Here we go. Fibonacci retracement. Thank you. I just want to run this down here. Now, I'm actually going to run this on 5-minute chart. Now, a lot of people will tell you, well, using Fibonacci on 5-minute, that's a little silly. Well, believe it or not, it can hold up from time to time, especially when you see a nice protracted move lower like we just saw. So if you see here, okay, right at the 50% retracement level, sure enough, we've got euro butting up against that right now. Although the trend on the short term looks like it could be a little bit higher. Okay, I'm just going to get rid of the Fibo here. Actually, let's leave this on here because I want to see how this is going to trade. This shouldn't block us out too much. So as we can see here, we're breaking through this level. All right, we've got euro trading higher. All right, we're ahead of the Bollinger Band outside. It looks like perhaps a strong move. We've got stochastics also moving higher. So perhaps this next level up here at about 144.56 could be some short-term resistance. So we're going to see what happens there. But basically, the idea behind the way I trade, it's called price action trading. The idea is that we're looking for different support and resistance levels. We're going to use 5-minute charts to do our day trades. We're also going to use some of the longer-term charts, like, longer-term, as in 30-minute or 2-hour charts to find some different support and resistance levels. And the basic idea, it's just pretty simple. We want to try and buy ahead of support. We want to try and sell ahead of resistance. And that's sort of how we're going to enact our trade. So if we can get low-risk opportunities, okay, at times that we can get in, and when I say low risk, I mean, a couple of pips here or there, 10, 15 pips, those are going to be trades that we're going to be apt to take. So we're also going to consider what type of candle pattern is forming at that resistance level. Perhaps if there's anything happening with regard to the Bollinger Band or the stochastic setting, which is a 553 setting. I don't know if everybody can see that okay, but it's a short-term setting. You know, we're going to see if we're getting to an oversold or overbought territory, which just could be an additional confirmation for us that a trade may be good. So, in any event, this is what's happening with Euro. We're still moving a little bit higher, and at this point, I'm not inclined to buy it. A lot of people, when they place their trades, they say, well, you know, it looks like it's going up. Well, you know, that's great. There's a lot of times when you can look at a chart and say, sure, it's going up. But sometimes, you know, the risk may be just a little bit too high for where you want to place your stops. Now, I don't like taking stops and just, you know, using arbitrary pip figures like, oh, I'm just going to buy it here and place a 10 pip stop or a 12 pip stop or whatever fits in with my risk to reward requirements or my overall risk tolerance. At the end of the day, the market doesn't really care what my risk tolerance is, whether it's, you know, 10 pips, 8 pips, 12 pips, 50 pips. Okay, what the market does care about is these support and resistance levels. So that's what's going to be important going forward. So this is what's going on with the Euro. We're going to keep an eye on it right around this level. Looks like we're setting up a little bit of support. Perhaps there is an opportunity to do maybe a quick scalp here. Let's just look at this on this 1 minute deal. Now, somebody asked about this earlier for the 1 minute scalping setup that I use. And essentially what this is a Fibonacci chart on a 1 minute chart. Okay, we're looking at Euro USD here. And what this is telling us, there's also a 3 Bollinger Band setting. So what that means is we have a 1 standard deviation setting, a 2 standard deviation setting, and a 3 standard deviation setting. And basically what we're looking to do is we're looking to scalp, okay, in between these different settings. And as each area moves higher, okay, we can potentially scalp beneath or above the previous setting. So right now we've got, this was a pretty nice little move higher here on the 1 minute chart, but we see that we have a red Fibonacci candle forming. If we get a breakdown of this, perhaps we could sell it and think maybe we're going to come back to this middle line, but not inclined to do this here quite yet. Let's see here. Someone was trying to buy at 144.10 but missed. It happens, right? Okay, we're going to come back to Euro in a second. Somebody wanted to take a look at the pound. All right, here we go on the pound. You can see that the earlier highs today were up at about 163.63. What I'm going to do is I'm just going to drop back here to a quick 30-minute chart and see if we have anything happening as far as support or resistance goes. Well, you know, you can see here this was earlier today where that previous high was before we sold off, coming into the you know, the European session as it happened. But recent highs right here, 164, and more importantly, 164.25. So that 164.25 is an idea or a level that I've sort of been keeping an eye on, and I'm going to continue to keep an eye on that. Let's see here. Question: what do you mean here about support and resistance? Some people use Fibo, pivot, previous high, and horizontal loans. Yes. Okay. Question about support and resistance. There's a lot of different types of support and resistance, and yes, different people like to use different levels to figure out their areas. You know, it really comes down to personal preference, trading strategies, and that's what's nice about the market, is that everybody can have something different. Okay, I like to use Fibonacci levels when I see something like, you know, this Euro, where it was in a nice, pretty protracted trend, whether it's, you know, a downtrend or an uptrend. Okay, I can use that on a short term. On a longer term chart, you know, I find that they work a little bit better. Other people, as you mentioned, like to use pivot points. All right, I don't tend to do a ton of scalping, so I don't typically use the pivot points. I feel like, you know, people like to scalp in between those points, and, you know, that's fine if that's what your strategy is. You know, other times, support and resistance, okay, I'm talking about horizontal levels, swing highs and swing lows, all right, and then sometimes you have the diagonal support and resistance when you're in a trend. So, you know, you could draw a trend line like this coming up higher, and as soon as you got a break of that trend line, you could potentially sell. So yes, there are many different ways to view support and resistance, but when I'm trading on a day chart, on a 5-minute chart, all right, I'm not as concerned about trend that's happening, although if it isn't a very identifiable trend, be it an uptrend or a downtrend, obviously you want to pay attention to that. You don't want to fight the trend. Okay, but at that point, you're going to be looking to try and buy in using either pullbacks, if it's an uptrend, or sell it using pullbacks, all right? Or you're going to be looking perhaps for a reversal. If it can reach a support or resistance level and put in, you know, some of the identifiers that we would look for when we look for reversal candles. So that's the basic tenets behind how to use the support and resistance. Let's see here. Mike, question about the 1 minute setup. Can it work with standard candlesticks instead of Heiken Ashi? Yeah, you can do it that way. But here's the thing, Mike, for asking this question. Got to be careful with Heiken Ashi versus candlesticks. A lot of people make this mistake, but when you see long wicks in candlesticks, all right, that generally shows you some sort of support and resistance. So if you're looking at a candle with a long tail to the downside, perhaps you're thinking, well, maybe there's some support there, okay? Or if you see it to the upside, like we're looking at with these euro candles, you see these long wicks to the upside, all right, people might think that there's resistance there. But with the Heiken Ashi, that actually is a good thing, okay? That shows you a little bit of a stronger trend, okay? So I like to use Heiken Ashi just on the 1 minute. I prefer candles for a little bit longer term on the 5 minute because from there, I can use patterns to identify so on and so forth. The Heiken Ashi, I mean, it's pretty much just, red or green, go or stop. So that's pretty much, the way that I look at it. So we're still watching this euro here, okay? And you can see here when we took a look at it before, that little Heiken Ashi bar right there didn't do anything, and we went back to green here. So perhaps we're going to wait to see another violation of this outside band here, okay? Maybe even get a violation of the third band. Perhaps there'll be a reversal in there. We're going to kind of keep an eye on that and watch. In the meantime, I want to go back to pound here. All right. Now, I'm sorry, we're sort of all over the place and what's going on. It's a constant battle, obviously, when you're trading. You're looking for opportunities. You're looking for different things to do. Right now, we're sort of getting towards levels that look like they're coming on resistance, whether it's this Fibonacci resistance here at the 61.8 retracement level, all right, or if it's just the previous swing high that we saw in the pound. We're sort of getting what I'd call a little bit toppy. And, when things start to get toppy, that's when I'm thinking, all right, I'm looking for a reversal candle of some type. Now, when I look at the pound here, I can look at this candle right here, this 850 candle, and say, well, that was a pretty decent reversal candle. But you can see it kind of pulled back and is still coming higher. So right now, looks like we've got a little bit of resistance happening here. Okay, but I'm not certain that this candle formation has really told us anything significant. If we could see a quick, spike higher up here ahead of 163.50, which, again, the law of round numbers, a lot of people like to use that just because it's easy to do. That could potentially be an area of resistance as well. But, when I look at this candle formation, I don't see anything that tells me that the buying's exhausted right here. And in fact, I can see the stochastics just waiting to catch up here before we hit this overbought area. So perhaps we're going to get a spike to 163.50, which at that point, perhaps then I might say, maybe there's a reversal happening here, but not just yet. So, this is part of the, sort of analysis you have to do as you're going through. And you got to ask yourself, is this the time when I want to get in? And a lot of times people get into trades too early, so the risk is too great. Or sometimes, you're too late and you miss it because the risk is now too great. And, you have to determine to yourself, well, what kind of risk am I looking to take on each of these trades? And because I'm on the 5 minute chart, I like to try and keep the risk as low as possible. Okay, I'm either right and the trade goes in my favor, or I'm wrong and I get out, I reevaluate. So that's sort of why I like the 5 minute versus the 10 or the 15 minute, for example. There are a lot of people that would prefer to do 10 or 15 a little bit longer term, but for me, I'd prefer to see that first candle in the bunch. If you think about a 10 minute chart, it's essentially 2 5-minute candles. A 15 minute chart is essentially 3 5-minute candles. Well, if the move starts on that first candle, I want to try and get in as quickly as I can. I don't want to have to wait for the candle to go, say, for the candle to close after 15 minutes, which at that point, the moves happen. Now I have to put on more risk. Okay, and if I have to put on more risk, now all of a sudden, maybe if I'm wrong at that point, that's going to be a trade that's going to hurt me a little bit more than if I did it, say, off of the 5 minute candle. So, all right, we can see maybe the resistance here in pound was pretty good. We're just reaching the 20 period moving average right there, and you can see that these Bollinger Bands are starting to flatten out. So this could potentially mean that we're going to be going a little bit range bound here. Let's see here. Question, let's see here. Do I trust the Bollinger Bands on such small time frames? Yeah, I do. In fact, Bollinger Bands are probably my go-to indicator. There's a lot of different ways you can look at the Bollinger Bands. A lot of times, a lot of these basic tutorials, they just tell you, well, it's either going to trade beneath them or you're going to break out, and that's really it. And, it's funny, but I actually have had the opportunity to speak with John Bollinger directly regarding the bands. And, I had some disagreements with him about what the best way to use them were. Now, of course, he invented the thing, he wrote the book, but, I kind of felt like he was holding back a little bit and didn't want to let the real secret out of the bag. But in any event, yeah, I like to use the Bollinger Bands because it is going to show you times when, there's going to be, overextended periods where you can get in and get out. So, let's see here. Someone says on his charts, pound dollar snapped on the old fib level from 330. Which chart are you talking about there, Monkey? Are you on a little bit longer chart, daily chart maybe? We'll come back to that and take a look. Let's just go back to the 1 minute scalp deal here on Euro USD. Someone's saying that the Heiken Ashi sort of is a little bit late to show us when the trend reverses. Well, it can be, but that's why we're doing it on the 1 minute chart. Because, once this thing starts to go, okay, if we get, a move 1 minute, 2 minute, perhaps we can get in just a little bit early, before, say, a 5 minute candle closes. And that's why we would look at that. But right now it looks like these bands are starting to flatten out a little bit. Okay, it looks like maybe we're still got a little bit more to go on Euro here. But, remember, we're approaching 144.50, which again, as we know from these law of round numbers, that, these are sometimes just dumb areas of resistance because people think that, not because it has any technical merit, but just because. Okay, and then we also have just above it this Fibonacci retracement from earlier this morning. So we can kind of keep an eye on that and see what's happening. But I'm thinking maybe it looks like we're getting just a little bit of market exhaustion happening here. But, let's see what happens. I mean, it's interesting to me. We've got stocks down in the U.S., and I would expect a little bit more risk-taking, perhaps, in some of the market pairs. But you can see that the Aussie, for example, all right, the Aussie's trading higher than the dollar. And that's something that, the Aussie's a great pair. It's tough to short the Aussie because of the interest rate differentials. You can take a lot of pain trying to do that. Although if you, catch it right, there's a reason specifically why Australia should be going down. That could be a great trade for you. But, you can see that, even with stock market weakness here in the U.S., that there's still some dollar weakness happening. And, despite all the problems surrounding the Eurozone, with the debt situation, debt crises, people would still prefer to own that than dollars. So that's all has to do with the QE2 here and the quantitative easing and Fed policy. Question, what's the risk to reward on scalping? Good question. Depends, honestly, I have to sort of, when I decide to scalp, it's because I don't see anything in the market that is going to show me a potential nice reversal or getting in on the start of a trend. So I'm more apt to keep the trading short term. And if I decide that I'm going to do some scalping, my risk to reward is probably pretty close to 1-to-1, depending. Now, I'm going to, use this chart to get in here, okay, and do some trades, but I may come back to the 5 minute just to check these levels and just to see where we are. Because if I get into a scalp trade and all of a sudden it looks like, hey, you know what, that was a good place to get in and it looks like it's got some more room to go, I'm not going to be, I may let that run a little bit rather than just say, okay, I just want to take my 10 pips and run, whatever the case may be. A question about John Bollinger. His greatest tricks to call them Bollinger Bands when in fact they show price distribution. Yep, I couldn't agree more. We actually, this is for Chaos, I got in a conversation. My theory was that it's actually the slope of the band that seems to be most important. And he sort of said, well, yeah, but, sometimes, you can't really measure the degree of slope. And I was kind of like, well, I have a pretty decent idea when I look at these things. So, let's go back here. We've got, Euro moving higher. We just came through the second band. If we can get a violation here to the third band, maybe we'll take a quick little scalp trade in the opposite direction and see if we can get some action here. Let's see, are the bars MA based for changing colors? Genius, what do you mean MA based? Moving average based for changing colors? No, I think it's just based on price there. All right, so here we are. We're at this 144.50 range. That nice little round number here on the euro. Let's see what happens as we get up to 56.60. Now this could actually be a decent area for the scalp. All right, if we can get a nice big push here, perhaps that pushes us up right into that 61 Fibo, put us on the outside of this third band. All right, which may be a nice spot to affect a little reversal scalp here. And then who knows, maybe that reversal scalp could be the start of something new, depending upon maybe we're going to get a decent candle set up here on the 5-minute chart. So if we saw something like a shooting star or a hanging man or something like that, that could be a nice little thing happening here. But right now, it's maybe hard to see, but we've got this candle sitting just outside of the band. And, sometimes when we get the bodies of the candles that close outside of the band, those are also good for good scalping opportunities as well. And then on top of that, we've just got the stochastic hitting overbought. All right, looking like it may cross over here and perhaps pull back. So, we're getting ready here to see what we'll do. Let's see. This question: do I use any custom indicators? I don't use custom indicators, Mike. I use just the classical stuff. I mean, that's sort of the way I've learned to trade. I've been trading for 12 years. And it's kind of like, once you learn how to drive a car, you always know how to drive a car. But it's like if you needed some sort of special, I liken it like this. Maybe it's not a car, it's not a good example, but say an airplane pilot who is flying the plane. You can either fly with the instruments or you can fly, just kind of looking around outside. Well, there's going to be times when the instruments tell you everything's okay, but you're only 10 feet above the water, and if you don't have your wits about you and you're not paying attention, you could have the potential for disaster. So I think, there's room to do both. Okay, but for me, I like to keep it simple. I like to keep it easy. And, part of the deal with, doing this type of trading is that you just have to have a lot of patience. Sometimes you're sitting there and you just watch the thing go up and you said, man, I knew this was going to go through the 50 and it was going to go higher. But for me, the risk was just a little bit too high. I didn't have a great place where I wanted to stop it. I perhaps could have used beneath the 20-period moving average here. But, for me, that was too far away, too much risk to take for the potential reward. So we're just keeping an eye on this. We're going to go back here. Of course, the Heiken Ashie's already red now, and we're pulling back in. What to do? Let's see here. Looks like some guys were trading some pound-euro or euro-pound earlier. Is that right? Okay. So what do you guys think here? Would anybody be willing to put a short in on Euro USD based on what we're seeing? Anybody? Why do I like to scalp versus intraday and longer term? I already in at 51. Nice. I like that. Let's see. The standard on my 5-minute chart is the standard 2 standard deviation, 20-period moving average for the Bollinger setup. The question about why I like to scalp versus intraday and longer. Well, it's not so much that I prefer to scalp versus intraday and longer, but obviously if I can get into an intraday trade that's going to go a little bit further, it's going to make me some more pips, I'd prefer to do that. But once a trend's already sort of been established in the short term, and it started about 3 hours ago. All right, once we got outside of these levels and started moving higher, all right, it's tough for me to go in and say buy this here, and try and hold on for a longer term trade. So if I can get a pullback to maybe here, maybe this 20-period moving average, perhaps that may be a sign that I'd want to potentially buy that. But at this point, I'm thinking, where's the resistance? Okay, the trend looks like it's up, but is there going to be a place where, perhaps this stops and maybe, reverses and comes back down? So looks like we already had somebody who shorted at 51. Okay. Maybe a little bit early, but that's okay, Genius. I like early too. Sometimes, let's see, Chaos is still long Euro USD. Alright, that's good. Let's see, someone says they want to wait for 144.75. Yeah, I suppose that's a decent level as well. I mean, it's also like saying, well, I guess we could wait for, 145, say 10. and hope it gets up there. The problem is that now we're sort of sitting on our hands, and we're not taking advantage of the market movements in the short term. So we're still watching, see what's happening here. Let's see. Question: can you use 3 bands on larger time frames? You can use 3 bands on larger time frames, but I find that you're not going to get violations of that third standard deviation band very often. I mean, you will on some big moves, but you just want to sort of scalp that from a reversal standpoint. But if you're on a longer term time frame, you potentially may want to get in on the trend. Okay, and that may be a potential buy depending upon where it happens. So I prefer to keep it in the short term on the scalping setting, just because it's just much easier to get in and out, much tighter stops, much shorter or smaller risk, if you will, with these trades. So, all right, let's see what's happening here. I want to go back to euro. Still putting in a little bit of a fight here. Okay, but it's not really pulling back much. It's just kind of sitting in there. It looks like it wants to push higher. I still haven't seen a good enough candle for me to say, okay, yeah, this is it. As you can see, the stochastic here just curled a little bit higher, so it may not be done. So maybe if we get one more big push up here, maybe somebody can show us a long tail. Then we'll see. Someone's saying we got JPY rallying. Let's take a look here. Yeah. What's this? 5-minute chart? Yeah, it looks like got down to 83 earlier, but now looks like dollar may be coming back just a little bit. Let's see here. Questions. All right, so we're all just kind of sitting here hanging out, and that's part of as trading, as I'm sure a lot of you experienced guys know, is that trading should be boring. A lot of time it's just sort of sitting around waiting for things to happen. And looking for that good entry. Now, when you're scalping the market, you can take entries that aren't as great, because you're going to get out quickly, hopefully, if that's the case. But, it doesn't always necessarily mean that that's a good thing to do. So, all right, here we go. We're at right at this Fibonacci level here. Looks like we're just popping through it. And, man, this thing just wants to keep going here. I guess Genius is looking like the genius, because he's been long this for some time. So that's a nice trade for you. The short on the euro will be counter till what? Interesting. Not sure exactly. Yeah, it does look like a V-shaped move on the euro right here. But on the 5-minute, it's not as significant a movement. When you look at it, going to 30-minute, you can see, yeah, this looks a heck of a lot better on the 30-minute chart. And actually now you can see here that that 44.50 area is right at the 20-period moving average, which looks like it's making a strong push through there. So perhaps this is now going to be some support. We can also draw, a little bit of a horizontal line here. Let's see here, add a horizontal line, and we'll just draw it right here at 50 there. All right, you can see that earlier it was acted as a little bit of resistance here, a little bit of support here, a little bit of resistance here. All right, so you can see how this 44.50 area can be some support and resistance, So I'm just going to get rid of that real quick. We're going to pop back down to the old 5-minute. All right, and boom, we've just busted through here at the 61.8 level. We're still moving higher. And, from the scalping perspective, man, it looks like that we should have perhaps affected that scalp going from the first through the second to the third Bollinger Band area. But it looks like we're pulling back just a little bit from this third band, which means we may be just a little bit overextended here. So, I hate to keep harping on it, but I'm looking at still looking at the short here. See, what's your exit if you're short Euro USD? Well, I guess it depends where you got in is the problem. Right now we're considering the short. We haven't actually done anything yet to take that, but I would say up at 44.75, that area somebody pointed out before that they wanted the short in front of, perhaps would be some short-term resistance. But at this point, it just looks like this thing just wants to keep moving a little bit higher. But let's see what happens here. We've got that 44.66 area. All right, we've got a nice little candle forming here, and it looks like this thing just wants to keep pushing higher. So, what else? Has anybody else got anything that they're looking at here? Oh wow, look at pound dollar real quick. Look at that move right there. Right up to 163.72.50. Wow, that just broke that high. Let's take a look right here on 30-minute chart. Wow, you can see a nice breakout happening there. Let's see, let's go back to the old 5-minute here and see if we've got anything that says, man, look at this. Now, sometimes you see a big candle like this. These are ripe for shorts. Let's just pull this up on the, I'm going to pull this up on this 1-minute deal here, and we're going to take a look. And wow, you can see that this move is still pretty strong. This could potentially be a move that you fade up here if you've got a little bit of, I guess, cojones we call them. This looks like a pretty strong move for pound. All right, it looks like U.S. stocks are starting to rebound here a little bit. So, at this point, I think that we can move higher with both euro and the pound based on correlations that we've seen. So, it's not advisable to perhaps get short right here as we're seeing it. Question, how do I define the pip size of my stop loss? ATR based depending on previous candle or good question. Typically ATR doesn't come into play, but it has to do with just basic candles, where that support and resistance is based on swing highs, swing lows, perhaps Fibo levels, you name it. So, there's always an idea, but if I'm going to affect a reversal, all right, I typically want to see a nice reversal candle, and then I'm usually just going to put my stop just above it. So right now, these all look like still pretty strong candles here. So I'm not seeing anything that's saying, whoa, this is a reversal. But, if this thing could close out down towards the lows, maybe at 61 area, okay, with perhaps a shooting star, or evening star formation, then that may be something that I consider hopping into. So let's see here. Let's see. Just got out a long cable. Chaos. Why'd you get out there, man? That was a nice. Okay, well, it looks like it's pulling back a little bit. Let's go back to this 1 minute. We're still in the green zone here. I'd prefer to see this go red. I mean, we could put a little short in of cable right here and perhaps take it down. Well, it's only going to be about 5 pips or so to this next level. If we can get the breakthrough there, I'll look at this on the 5-minute and see. Probably a little bit too much risk to go up at the top of this bar for our stop. So let's just see here. Yeah, we could put this in with a little bit of a short-term move here if we wanted to and try and scalp this. But man, I got to tell you, this thing looks just so strong. I'd be disinclined to get short this at this point in time. I guess maybe because we're not in full scalping mode, it's a little bit more dangerous. And as you can see here, that would have been a good scalp had, like we said earlier, we had the cojones to take it. But we didn't. And you know what? That's all right. I mean, there's going to be obviously lots of opportunities that we're going to miss from time to time. But as long as we're keeping our eyes on it and giving ourselves a chance, we can always come back and see if there's going to be another time when we can hop in. So, Greenwood tells me what's the setting for the Bollinger Bands. Which setting? For that 3 standard deviation? Okay, they've got it right there. Thank you. Let's see. First short on Euro Scalp was -15. Last one's break even. Better off holding them along. I agree, genius. Let's see. Do I trade only the U.S. session? Most of the time, just U.S. session. Sometimes I'll get up early for the Euro session or parts of it, depending. It's sometimes it's kind of hard to get a little routine together. I'm based here in New York City, so there's enough movement in the New York market that I can sit here and say, okay, this is a decent time. But I see this candle setting up here, okay, right on the euro here. We've got a little bit of a shooting star candle. All right, it looks like we've got about 10 pips up to that 75 area. Candle sort of closed outside of the band. The whole thing wasn't out there, but I'm going to wait and see what happens on this candle. If we can get a little bit of a push down here, I think I may look to do the short ahead of 44.75. So let's see here. Question: how many time frames of the same pair do I watch at the same time? 2 or 3? I don't suppose I move from one window to another. Yeah, sometimes I do. I just typically just change it up to see. Generally speaking, when I get in the morning, one of the first things I do is I'm checking out these different price levels, so I have a good idea. So I know, where things were earlier in the day, how high it got, where the swing highs, swing lows are, and just some areas of different support and resistance. For example, we can look back to earlier this morning. You can see on the 30-minute chart that it broke new lows, which was down at 143.76. But if we go back just a little bit, all right, you can see that, which way did I go? Yeah, if you go back just a little bit, that was the low right there at about 76, and then we come back over to here. All right, and you can see that, that there were some other areas down there. That 75 area was pretty much a low area that got violated, but not in a very big way. And you can see that that long tail right there showed you that. So that was on the 30-minute candle. I mean, that's a nice reversal candle there for the 30-minute. See, how many hours a day do I watch charts? Too many hours, let me tell you, Harley. Just constantly keeping an eye on them. I've also got alerts set and things like that, so when some of these levels get hit, I can sort of perk up and say, hey, what's going on? But I do a lot of other things during the day. I actually have automated systems that run, so I follow those. All right, I also do my blog article, which hopefully you guys have now been reading on FX Street. Titled Forex and 4, comes out with an early morning video, as well as a blog. The web domain for that is www.forextradingblog.com. But we're now got it up on FX Street. It just gives you an idea of what's happening before the U.S. session opens. Some things to look out for, some things that may have happened earlier in the Euro session, a little bit of commentary, sort of what the theme and the mood of the day is. So I got a bunch of different things going on at times. So I'm not always doing discretionary trading. When I'm out looking at the markets. What is the highest time frame I look? The highest time frame I look for, hard to say. It's interesting, but sometimes depending upon the trade I get into, sometimes you get a really nice sweet spot where on say a 5-minute day trade, you get into a position, it starts to move in your favor, it's doing very nicely. And now you start thinking to yourself, well, wait a second, this could be an area that's got much longer term ramifications from a perspective of support or resistance. So, just yesterday I had gotten short Euro USD, and I thought about holding it, for part of the overnight, and I ended up just getting out at the end of the day, which turned out to be a decent trade. But, perhaps I could have held it overnight and said, you know what, I want to turn this short-term trade into a longer-term trade. So I will use, 4-hour charts, daily charts from time to time. The fib level still in play, or do I make a new one? Well, I'm not actually going to draw a new fibbo. What I'm going to do is I'm going to consider that now that we've broken this 61.8 level, that we've got potential to get back to the original level of where it is. So, or where we started to draw the fib level. So I haven't actually drawn one to the upside, and that's the problem, is that when you have, a trend in the short term, you can look at it from a perspective, okay, well now we're basically in an uptrend, so I could draw a fibbo here, but if we make a new high, then you have to keep drawing, I've just sort of was looking at this from the perspective of looking at this previous downtrend today and seeing how much of this move could retrace. Now that we've retraced 61.8% of this move, okay, I bet you that we can get higher, at least back up to this 145 level, if not come back and test these highs just above 145.12. So that's, probably something I would look at for the end of the day. But at this point, I'm not certain that I want to enter this on a breakout here unless I can get some sort of appreciable pullback. But, it just looks like it's not going to happen at this point. When I think about what's going on with U.S. stocks right now, it looks like stocks are starting to come back, climb back higher. S&P's up a little bit, and it's kind of like, well, everybody's thinking maybe bad numbers are going to be good for stocks because maybe this is going to be, bad economic figures are going to make the Fed say, whoa, we need more quantitative easing. We haven't had enough to really get this economy going, which, is probably a death wish in a lot of ways, because, some of us may be under the opinion that regardless of what the Fed does, it's not the Fed's monetary policy that's going to move the economy, but it's actually fiscal policies that are going to affect, the way economies work. So, that could be a reason why we're seeing some of this movement. Let's see, so do I always try and trade in the direction of the trend? It depends on which trend you're looking at. You can see trends on many different levels, whether it's a 5-minute short-term trend, 30-minute, 2-hour intermediate-term trend, daily chart, longer-term trend. Generally speaking, with my intraday trading, my go-to play is trying to pick off a trend reversal. Like earlier this morning, I actually had entered first one down here on Euro at about 143, I forget where I got it, 85 I think, and I ended up getting stopped out on this move just beneath here, and then had to attend to some other stuff. I came back, I saw it here, I did a quick scalp, back up to 44.05 to get out, to basically put myself at about break even, and then, was running around doing other stuff, and then boom, just kind of missed this whole move higher. And now that we're at this point, I'm sort of thinking, it's just tough for me to buy up at this level, knowing that, we've already come down here 45 to 143.75. That's about 125 pips, which is right around the daily ATR for Euro USD. All right, so here we come. Now we've retraced back, roughly another 100 pips here. So how much more movement or room do I have to the upside? And, I'm guessing it's probably another 25, 30 pips, which at that point the risk to reward doesn't lie. All right, let's see. Yeah, I do try and get up early, Jake, to get some of that London action. That's really, the best, in my opinion, time frame to trade is those London hours. But, New York's got its pluses too. So, what kind of alerts do I use? Generally, just price alerts, audio, saying, just alert me if we hit this, level, and it just goes beep 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 beep, and that's about it. Let's see, 88.90 is 61.8 of Euro GBP for that butterfly. All right, I don't know what you guys are doing, genius. You're way beyond me. Let's see, what's the maximum number of pairs I'd have open positions? Hard to say. It's the kind of thing where a lot of these pairs, because a lot of these moves are so highly correlated, and the correlations change over time. But when you think about something like pound dollar or euro dollar, all right, both of these are moving higher today. And you could essentially say, well, this is just a weak dollar trade. So, I don't want to sit here and go, all right, well, I want to buy pound dollar, I want to buy euro dollar, I want to buy Aussie dollar, because all I've essentially done is I've just shorted the dollar, 3 different pairs. So there's really not a ton of diversification there. So, I may try and choose which one I think is going to work the best. And, wow, incidentally, if we had those cojones, it looks like that pound dollar trade may have been pretty decent there from the scalp. That's too bad. And especially since we're about to end in any minute. So it's hard to say how many pairs I have open. Generally speaking, I try to pick off some non-correlated pairs, get some crosses in there to mix. Let's see. So I look at price action on the 1 minute, gauge the entry off a single bar like doji in 5 minutes. I assume, Genius, you're talking about the scalping technique here. Yeah, generally speaking, I want to try and trade it in between the different standard deviation bands, and as we reach a new band, all right, there's always a little bit of caution, and if we can get through one band and close beneath there, then I want it to go to the next band, to the next band, to the next band, so on and so forth. So that's typically how it works with the scalping for there. Weak dollar, Harley, yes, that's correct. All right, let's see. Why didn't I put on a trade? Kevin, that's a good question. We should have probably hit that pound. It's one of those things where, you want to try and make trades. You want to try and, show people entry points. It's just, sometimes you're talking and you get sidetracked, and to be honest with you, it's a little bit more difficult, when you're seemingly talking and trying to place trades. And, next time we'll get into some scalping, and, maybe we'll just say, all right, I'm just going to go radio silent, and, we'll do the trades, and we'll see what happens. So, I apologize. Let's see here. Bollinger was a student of Dr. Alan Andrews, who developed Andrews Pitchfork. Interesting. Very interesting, Jake. I did not know that, and to be honest with you, I didn't know if he would be forthcoming with that information either. So it looks like we're wrapping up here, guys. We're about at the end. Any last-minute questions? These are sort of the ways I do things. If you want to take a look at some of the other things that we do, you can come check out our website. We have forex trading courses for both beginners, intermediate, and advanced. I'll just show you. You can take a look at the website here, and basically it's just www.fxedu.com. We're running all kinds of courses, you name it. We also run a one-on-one mentor program where I actually do one-on-one mentoring with people who are serious about learning to become traders. So, you can contact us, ask about that as well. Again, the website's www.fxedu.com.